It is 9:17 a.m. Pacific Standard Time. It is the second day of December 2025. This is a palindrome episode 1221 of Bitcoin. And what do I got for you today? Well, it seems that Vanguard is going to start selling ETFs for Bitcoin. And of course, they're going to get into shitcoinery too, because, you know, that's apparently just the way it works. But Vanguard, if you don't remember, swore up and down. The last CEO swore up and down that Vanguard would never, ever, 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 ever offer any type of product like that. Of course, that CEO is gone. The new CEO says yes, and well, it looks like it's going to happen. And then, well, Bank of America, what are they doing? Seem to be warming up to Bitcoin as well. Then we're going to run over to Poland. Poland's president has, well, he doesn't really like this crypto bill that he saw, so he struck it down. I'll let you wait until we get into that particular story to figure out which way that hammer dropped. And then, remember yesterday, I was talking about the yen carry trade basically collapsing. There's probably more to that story, and in fact, Cointelegraph has an article here that we're going to get into, talking a little bit more about the macro environment around the yen carry trade and all of this together, kind of doing, you know, basically putting its ape-like weight onto Bitcoin. And then Musk has a tendency to open his big mouth at particular times. Sometimes he says stuff that's good, and sometimes he says stuff that's bad. I'll let you be the judge on this one. And then frontier AI models. I'm not sure DeFi is going to last. Not the way it's built right now anyway. I think we're in for a lot more hacks, and I think the rapidity of those hacks are, well, I think they're going to accelerate, and we'll tell you why. China is going to ban Bitcoin again. And again, and again, and again, and again, and again. Because that's what China does. It says one thing, of course it always does another one. And then Zappo Bank, we're going to talk a little bit about it here at the very end. But first, let's get into this Vanguard business here from Bitcoin Magazine. Micah Zimmerman is writing, world's second largest asset manager, Vanguard. All right, so BlackRock is the world's first. Vanguard is the second asset manager in size. Well, Vanguard opens its platform to Bitcoin and crypto ETFs, according to Bloomberg. All right, well, I guess we'll take it for rote if it came out of Bloomberg. Vanguard Group will allow Bitcoin and crypto-linked exchange-traded funds and mutual funds to trade on its platform, reversing a policy that for years barred retail clients from accessing digital asset products through that firm. Starting today, Tuesday, Vanguard brokerage customers will be able to trade ETFs and mutual funds that primarily hold select cryptocurrencies, including Bitcoin and other cryptocurrencies, according to Bloomberg. The move marks a shift for the world's second largest asset manager, which has long argued that digital assets were just too volatile and extremely speculative for long-term portfolios. The decision follows growing demand from both retail and institutional investors and comes after the approval of spot Bitcoin ETFs in January of 2024, ushered billions and billions of dollars into regulated crypto products. BlackRock's iShares Bitcoin Trust, the largest of those funds, peaked near $100 billion in assets earlier this fall and still manages about $70 billion despite the recent price declines and outflows. The Bitcoin ETF lets investors gain exposure to Bitcoin without actually buying or storing the cryptocurrencies themselves. Yes, we understand that. Instead, the fund holds Bitcoin while investors simply buy shares on a stock exchange with the share price moving alongside Bitcoin's market value. It's a convenient and easy way to get invested into Bitcoin. It's not that hard to just buy the asset. It really isn't. For institutions and retirement funds and stuff like that, they have to go this route. But for you, dear friends, as retail, just buy Bitcoin. Don't let somebody hold your Bitcoin for you. Just buy the asset. Don't look for instruments that chase price discovery and price action. Just buy the asset. You'll chase it all by your lonesome, I promise you. But Vanguard's change opens access to crypto funds for more than 50 million brokerage customers. Let me say that again. This change at the top of Vanguard has opened the access to more than 50 million brokerage customers who collectively oversee more than $11 trillion in assets as of September 1st of this year. Quote, cryptocurrency ETFs and mutual funds have been tested through periods of market volatility, performing as designed while maintaining liquidity, Andrew Kajetsky, Vanguard's head of brokerage and investments, told Bloomberg. He added that back office processes for servicing crypto funds have matured as investor preferences evolve. The policy shift comes more than 1 year after Salim Ramji, formerly a top executive of BlackRock and longtime blockchain advocate, took over as Vanguard chief executive officer. While Vanguard will support most crypto funds that meet regulatory requirements, the firm said that it will not launch its own crypto products and will continue to exclude funds linked to meme coins. Well, at least they got that part right. Well, quote, while Vanguard has no plans to launch its own crypto products, we serve millions of investors with diverse needs, Kajetsky says. Crypto-linked ETFs remain the fastest growing segments in U.S. fund industry history, even after a sharp market pullback, underscoring rising investor appetite for regulated exposure to digital assets. BlackRock recently increased internal exposure to its own IBIT spot Bitcoin ETF, with the Strategic Income Opportunities portfolio now holding 2.39 million shares of IBIT worth $155.8 million. That's actually up 14% since June. Bitcoin jumped on the news, trading above 86,500 at the time of writing. Actually, it's more like 90,000 right now. We'll see if that shit holds, because God only knows who opens their mouth next and says whatever. Everybody's on pins and needles, man. That actually tells me more about the global realization of the citizenry of the globe as to just how bad the economies around the world actually are. I don't think anybody's going to be able to sugarcoat this, right? I think it's so bad that even retail lining up to buy gold in Australia, what was that, 3 weeks ago, 2 weeks ago? I think that tells you more about what's going on with the world economy than CNBC, Fox Business, whatever could ever tell you. The pulse is always with the people. I've never seen this before. I've seen some weird shit. I first, when the savings and loan crisis happened in the late 80s, like 89 or something like that, it was a huge deal, and it is dwarfed. It was dwarfed by the money printing that occurred after 9/11, and then again during the 2008-2009 financial crisis. But back then, it was a big deal, man. You could not look at the news without people talking about it. And yet, life on Main Street basically went about as normal. And the same thing actually happened, I was going to say 2001, the whole September 11th thing. Clearly things weren't normal, but that's like Homeland Security, Patriot Act. But monetarily, life kind of went on as normal. And then 2008, 2009, life kind of went on as normal. People were bitching, but they weren't lining up to buy gold. They weren't, of course, Bitcoin really had just been birthed at, January 3rd, 2009. So we, only the cypherpunks really kind of knew about it back then. But today, Today is different. Hell, even the pandemic, people tried to didn't really freak out about stuff. They got locked in. They couldn't go to restaurants. We finally emerged from our caves around the world and went out and did stuff. But again, we really didn't see very many changes. And then the realization that inflation that occurred during that time was never going to go away, or it wasn't going to go away anytime soon. And now we're looking at it as like it's never going away. And now people are lining up in the street to do things like buy assets that they essentially never normally bought in mass before. That tells me everything that I need to know about what the people think about what the hell's going on the street. And now we got Vanguard doing a complete 180 after they got rid of their CEO and got a new one. It's amazing. 50 million customers just got access. We'll have to see what happens, but 50 million is nothing to sneeze at. All right, on to Bank of America. What's going on with these cats? Bank of America green lights wealth investors to recommend up to 4% Bitcoin allocation. Oliver Acuna is going to tell us about, well, Bank of America running into the fray, as it were. Bank of America, one of the U.S.'s largest financial institutions, has become the latest Wall Street giant to warm up to Bitcoin. Beginning in January, the bank's wealth management advisors will be allowed to recommend a 1 to 4% allocation to crypto assets, according to Yahoo Finance. Initially, Bank of America and Merrill Lynch Thundering Herd will focus on 4 spot Bitcoin ETFs. BlackRock's IBIT, Fidelity's FBTC, Bitwise's BITB, and Grayscale's BTC. It's a major change for the bank, which previously allowed its clientele to invest as they wish, but did not allow its advisors to recommend any crypto exposure. They weren't allowed to even speak of it. The news comes just hours after asset management titan Vanguard reversed its long-standing policy and will now allow its clients to access crypto ETFs. Pausing to say this, if you think Bank of America is the last domino to fall here, you would be wrong. This is going to collapse all the way down to Main Street corner store banks, right? Whole chains of regional banks are going to they're just going to fall over and say, fine, let's do this thing. All right, so Vanguard reverses its position. Hours later, Bank of America says, okay, 1 to 4% allocation into Bitcoin. We'll allow it. This does not stop here by any stretch of the imagination. The move also brings Bank of America in line with wealth management platforms of other major institutions like BlackRock and, of course, Morgan Stanley. The action also likely ups the pressure on the dwindling number of holdouts. Wells Fargo, Goldman Sachs, and UBS amongst them, quote, for investors with a strong interest in thematic innovation and comfort with elevated volatility, a modest allocation of 1% to 4% in digital assets could be appropriate, Chris Heisey, Chief Investment Officer at Bank of America Private Bank, said in a statement, quote, the lower end of this range may be more appropriate for those with a conservative risk profile. Holy shit. While the higher end may suit investors with greater tolerance for overall portfolio risk. So there you go. Bank of America was the next domino right after Vanguard. It doesn't stop with these guys, I promise you. Now on to Poland. No Polish jokes here, I promise you. Helen Parts, Cointelegraph. Poland's president vetoes strict crypto bill, says it threatens freedom of Poles. And we're not talking about pole dancers. Poland's President Karol Nawrocki declined to sign a bill imposing strict regulations on crypto asset markets, drawing praise from the crypto community and sharp criticism from others in the government. Nawrocki, I guess that's how you pronounce it, vetoed Poland's Crypto Assets Market Act, saying that its provisions, quote, genuinely threaten the freedom of Poles, their property, and the stability of the state, according to a statement by the president's press office on Monday, introduced in June. This bill had drawn criticism from industry advocates such as Polish politician Tomasz Mentzen, who had anticipated the president's refusal to sign it as it cleared parliamentary approval. Although crypto advocates welcomed the veto as a win for the market, several government officials condemned the move. Pausing to say, this is when you start seeing who's working for their own government and who's working actually for foreign interests, like the IMF, like World Bank, like NATO, like the United Nations. These people, I guarantee you, these people that are voicing their objections right here, they are not actually caring as much about Poland and the Polish people as they are being instructed by voices in their ear from other places. I will bet you my hat, because I don't have much left, that that's the case. I just want to put that out there. All right, so officials condemned the move, claiming the president had chosen chaos and must bear full responsibility for the outcome. Oh my God, these people. One of the main reasons cited for the veto was a provision allowing authorities to easily block websites operating in the crypto market. Domain blocking, and this is a quote, domain blocking laws are opaque and can lead to abuse, the president's office said in an official news release. The president's office also cited the bill's widely criticized length, saying its complexity reduces transparency and would lead to overregulation, especially when compared to simpler frameworks in the Czech Republic, Slovakia, and Hungary. Yeah, see, they don't like, there are places where they don't appreciate 700-page bills. We should actually adopt that here in the United States. If your bill is over 20 pages, it doesn't even make the cut. Yes, I'm sure they'll all listen to me in Washington. Quote, overregulation is an easy way to drive companies to the Czech Republic, Lithuania, or Malta, rather than create conditions for them to operate and pay taxes in Poland. Naraki also highlighted the excessive amount of supervisory fees, which may prevent startup activity and favor foreign corporations and banks. Quote, this is a reversal of logic, killing off a competitive market and a serious threat to innovation, end quote. Naraki's veto has triggered a strong backlash from top Polish officials, including Finance Minister Andrzej and Deputy Prime Minister and Minister of Foreign Affairs Radosław Sikorski. Oh, it's like the helicopter. Domansky warned on X that already now 20% of clients are losing their money as a result of abuses in this market, accusing the president of having chosen chaos. Oh my God. The humanity. He chose chaos, and saying he bears full responsibility for the fallout, which is yet to be seen. Sikorski echoed that concern, saying that the bill was supposed to regulate the crypto market. Quote, when the bubble bursts and thousands of Poles lose their savings, at least they will know who to thank, Sikorski argued on X. Crypto advocates, including Polish economist Krzysztof Piech, quickly pushed back, arguing that the president cannot be held responsible for authorities failing to pursue scammers. See, just do the police work, y'all. The people have been scamming forever. Police have been around forever. Detectives exist. Do the freaking work. You're just going to regulate everybody into a box at one point or another. Nobody can even go outside anymore. Then that'll take care of crime. And then they'll go after thought crime. And then they'll start having to regulate what goes on inside your head. Then they'll put a box around your mind. I'm pretty sure this is not the way humanity was supposed to exist upon this planet, but I digress. He also noted that the European Union's market in crypto assets regulation is set to provide investor protections across all European Union member states starting July 1st, 2026. So he's leaning on the MiCA legislation to do the work, I guess. It's good that the Polish president said, fuck off, because at least there's some sensibility there saying, look, it's like the bill's too long. There's too much language. That means it's not transparent. And that is a breeding ground for overregulation, because people at any given stage of this, if it becomes law, of this law's lifespan, however long it goes, over decades, and different people interpreting different ways, that's the chaos. I don't know what these other morons are talking about. That's the chaos. And it makes me hungry, which is why I go to sats4snacks.com. That's right, it's sats4snacks.com. Go chill out with my good friend Permanerd and buy big old chunks of freeze-dried pineapple. You can buy those in 5-packs. 44,000 sats for freeze-dried pineapple. It's sweet. It's light. Naturally tangy. Bit chunks are 100% freeze-dried pineapple pieces made for the plebs who appreciate real fruit. Each bite keeps the pure tropical flavor of fresh pineapple with no added sugar nor preservatives. It's just pineapple, nothing else. A pleb favorite for stacking snacks. Tastes like a good day on the beach. You can also get just peachy, which is freeze-dried peaches and freeze-dried mangoes and freeze-dried bananas. And one of my favorite things that is not food-based, don't eat this, is Proof of Healing Comfrey Salve. You got little nicks, cuts, bruises, sprains. You got bee stings, wasp stings, whatever. As long as it's not a full-scale avulsion on your skin, which is a very deep wound, by the way, something that you need to go to the hospital to stitch up. If it's not that, use Comfrey Salve on it. Let the healing begin, brothers and sisters, with Proof of Healing Comfrey Salve. I love Comfrey. If you've listened to this show for any length of time, even before I met Permanerd, I was running my mouth about the wonder plant that is Comfrey. I love Comfrey. In fact, in every single episode that I've been doing lately, you can go into the show notes, and beneath all the articles, the first thing after the last article is going to be a link to my Comfrey guide if you want to figure out how to grow it yourself, how to propagate it yourself, how to use it yourself. But before you do that, make sure you go over to sats4 snacks. That's sats4snacks.com. Sats4snacks.com. Get yourself some freeze-dried bananas, freeze-dried mangoes, freeze-dried peaches, and, of course, the pineapple. And he's got some other stuff, too. Just go to sats4snacks.com. Make damn sure that you use coupon code Bitcoin, because you'll get a 2.1% off on everything that you buy, and it lets Permanerd know that I made the sale for him, and that way Permanerd can decide on his own time how many sats that sale was worth, and then he will give those to me on the other side. It's the Circle P, where I bring plebs with goods and services just like you to plebs just like you who want to buy said goods and services, but you're going to buy them in Bitcoin, because if you're not selling your goods and services in Bitcoin, you're not in the Circle P. Okay, so Bitcoin fell to 84,000. Yes, we were all sad. We were crying. We were all crying, and it was all a mess. But is Japan's bond market the culprit? Or is there more at play? Marcel Petchman from Cointelegraph, please, for the love of God, tell me more. Bitcoin price dropped sharply on Sunday after failing to overcome $92,000. The slide to 84K on Monday wiped out $388 million in bullish leveraged positions, leaving analysts searching for a clear explanation. Oh my God, what happened? A mix of factors contributed to the sell-off and pushed traders towards a more cautious stance. Some analysts quickly tied Bitcoin's drop to turbulence in the Japanese bond market, where yields on 20-year notes climbed to their highest level in 25 years. Higher yields generally signal that investors are less willing to buy those bonds at current prices, whether due to concerns about inflation or rising government debt. Although the move occurred on the same day, drawing a direct link was challenging, especially since the 30-day correlation has fluctuated between positive and negative throughout the whole year. Japan's market stress may also reflect deteriorating global economic expectations. Trader Jim Chanos, famous for predicting the fall of Enron during the dot-com bubble in 1999, highlighted in a recent interview with Yahoo Finance the growing risks tied to GPU-backed debt. Wow, really? GPU-backed debt issued by cloud AI companies. Okay. According to Chanos, quote, a lot of the AI companies are just loss-making enterprises right now. And if this does not change, there are going to be debt defaults. The financing trend that uses GPUs as collateral was pioneered by CoreWeave, according to Yahoo Finance, and has been accompanied by NVIDIA's large investments in the cloud sector. I need to pause here. CoreWeave did not actually pioneer this because just because you're borrowing against GPUs does not make it a novel idea. What am I referring to? Bitcoin mining. Dude, Bitcoin miners have been doing this shit for years. They were borrowing against their ASICs, right? And did some of them get wiped the hell out? Oh, yes, they did. On several different occasions, they did. And they learned their lessons. So CoreWeave apparently didn't actually learn very much of their lessons, and they'll probably get wiped out too. Who knows? Who knows where this shit goes? But Chanos makes a lot of sense here. If they don't get their income rails set up and actually making a positive profit, a positive inflow, then there are going to be debt defaults, and that's not going to be pretty. And it's not going to be pretty for the equities market in the general scheme of things. In fact, if that shit were to happen, people might actually fly to Bitcoin. They're going to go to gold, Bitcoin, silver, which is, I think, at $60 an ounce today, which is mesmerizing considering it was $14 not too long ago. But I digress. Let's get on to this. In these structures, AI cloud firms borrow against their racks of NVIDIA chips, effectively treating the GPUs as collateral, meaning that if cash flows stay weak and hardware prices fall, the entire debt stack becomes more vulnerable to default. Yes, we know. Another source of unease came from the regulatory environment. And remember, we're still talking about this drop in Bitcoin price. Even if not directly tied to Bitcoin, when traders sense that governments are tightening their stance on cryptocurrencies, many investors become less willing to increase their exposure. So even without direct consequences for Bitcoin itself, overall sentiment can turn negative. Reuters reported on Saturday that China's central bank reaffirmed its strict approach toward digital assets, pledging to intensify its crackdown on illegal activity. We'll get to that part here in a second. I've got a whole other story in the second half about that, so we'll just leave that alone. The 23% Bitcoin price decline over the past 30 days has disrupted how strategic digital asset reserve companies operate. Until recently, they had strong incentives to issue stock at market price and use the proceeds to buy Bitcoin. But that approach breaks down once a company trades below its net asset value. And they don't say it here, but remember, that's the whole MNAV number. All right, so if their MNAV trades below 1, you got problems. If it trades at 1, many traders say that actually makes sense. That is nice and healthy. If it trades above 1, there's a lot of people that don't like that shit, except for the company itself, because they can sell a whole bunch of stock and buy a whole bunch more of the actual net asset that is giving them that MNAV above 1. And then shit happens, and then it falls below 1, and all of a sudden you find yourself over leveraged and blah, 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 blah. It's the same gambling story the world round. It's putting your Rolex on the pile of money at the poker table because you're out of cash. And your grandma gave you that Rolex. So, if you lose it, you're kind of disrespecting your grandmother, which is one of the reasons why you should not gamble. Strategy. Their CEO, Phong Le, said in this famous interview that the company would only consider selling its Bitcoin if MNAV remained depressed and every other funding option had been exhausted. Although fear spread over the weekend, Strategy announced on Monday that it successfully raised $1.44 billion in cash to support dividend payments and service its debt obligations. Pausing to say, do you think Saylor might have given Phong Le a phone call after that interview? You think it's possible that he might have sent him a text message, possibly an email, or even just invited him over to his yacht to, chill out and have a drink while, strippers were pole dancing inside? whatever. But I get the feeling that strategy, Chairman Saylor called up Fong Li and said, why did you do that? Why did you say that shit? Now look at the crap I got to go do. I got to go raise $1.5 billion so these assholes can get clean diapers because of the shit you said made them pee their pants. I'm telling you, man, leadership is not just about who's leading. Leadership, if multiple people have leadership positions, is more about their relationships with each other, their internal knowledge of each other. Like fighting in a war with, which I've never done, but I'm pretty sure that you if you're like World War II in a foxhole and bombs are falling all around you and shit like that, you get to be pretty damn chummy with your foxhole mate as you're praying to God, even though both of you were atheists. You get what I'm saying? And it doesn't look like in this particular case that Fong Li and Saylor were on the same page, and immediately they raised $1.44 billion to assuage the markets because Fong Li didn't shut his mouth. Continuing in parallel, S&P Global Ratings, they downgraded Tether and their stablecoin reserves to the weakest levels possible on Wednesday. USDT began trading at a 0.4% discount relative to the official USD/CNY rate in China, signaling some moderate selling pressure. Analysts cited persistent gaps in disclosure and limited information on the credit worthiness of its custodians, counterparties, or bank account providers. Whatever. Bullshit. Dude, all that's disclosed. Whatever. Whether or not the criticism is fully justified, given that Tether does not operate like a traditional bank, the move still hurts cryptocurrency traders' risk appetites. So Bitcoin's crash to 84,000 on Monday reflects broader concerns, not just the yen carry trade, but broader concerns around the stablecoin sector and fading confidence in global economic prospects rather than any particular specific issue in Japan's government bond market. Okay, I have no problem with that because like I said yesterday when I was talking about it, there's a mess everywhere. Everywhere is a mess, and the Northern Hemisphere is going into winter. Whatever. Let's run the numbers. CNBC futures and commodities, and the markets are basted in blood, baby. It's red everywhere. Let's start with energy, which is all red, no greens. There's no hedging today from natural gas. Brent North Sea down 2/3 of a point, as is West Texas Intermediate, which is clocking in at $58.95 a barrel. Natural gas falling 1.25%, but still chilling out at $4.86. Which is essentially a little bit less than half of the price that it was at natural gas's highest price when we were coming out of the pandemic. I just want to make that clear. This is a very high price for natural gas, even if it did lose ground today. Gasoline, 1.5% to the downside, $1.84 a gallon. Merbon crude is also down 2/3 of a point to 64.72. Metal rock's not doing well today either, except for palladium, which is up almost 2 points, but gold is down 1.25, still chilling at 42.23 though. Platinum down 1.5. Silver is down a full point, so it is below 60 at 58.56 an ounce. Copper is down almost a full point. Ag is mostly in the red today, but there's some green flashes here. I got wheat up 1.36%. That's our biggest winner for the day. Biggest loser is chocolate, 1.8% to the downside. Meanwhile, live cattle is trading up 2 full points. Ranchers are happy today. Lean hogs down 1/4, and feeder cattle are up 2.33% today. S&P is up 1/3. NASDAQ is up 0.8%. The Dow is up 0.5 point, but the S&P mini is essentially in the red, but only slightly. It's generally moving sideways. $91,520 is the price of a Bitcoin. That gives us a $1.83 trillion market cap. You can get 21.8 ounces of your favorite shiny metal rock for your 1 Bitcoin, of which there are 19,956,538.66 of. Average fees per block are high today. 0.04 BTC taken in fees on a per block basis. That's about double the low side of what it costs to send a transaction. So what's going on? Well, looks pretty normal today. 25 blocks carrying 63,000 unconfirmed transactions, waiting to clear at high priority rates at 6 sats per VByte. Low priorities are half that. Mining, 1.08 zettahashes per second. We are still in zettahash territory. That's all I would ever need for security on this network. All right. Oh, shoot. Hold on for a sec. I did not have a screen set up. Okay, so here we are. From Carry Me Yin, yesterday's episode of Bitcoin, and Jason High with 500 says, thanks for another good episode. I misheard yearn, and in the intro is urine. Oh, God, urine crashed. Spitball Marksman with 5,730 sats says, great show. Thank you, sir. I appreciate that. Nakaz18 with 100 says, live aloha. Nostr Gang with 102 says, phony gay station coin. Pies with 121 says, thank you, sir. No, thank you. Thank you, sir, with 500 says, is this another Bitcoin death? Of course it is. Have you seen my mascot? It's Kenny with a Bitcoin sign inside. If you've never watched South Park, I don't know when you were born. Kenny always dies, in case you're wondering. Anyway, Nick Dose with 112 says, cheers, and cheers right back at you. Oak Grove says, for what it's worth with Spain. Hold on a minute. Yeah. Oh, nope. That was yesterday's. Well, let's read it anyway. For what it's worth with Spain, the socialist opening salvo in that war was to butcher half of the priests and nuns in all the churches there. So take that for what it is. Yes, I remember reading that yesterday, so I apologize for that. That's the weather report. Come one, come all to the news that you can use, or the second part of it. Elon Musk opens his mouth and calls Bitcoin a fundamental and physics-based currency. Before we begin with this article from Micah Zimmerman out of Bitcoin Magazine, may I remind you that there were at least 2 other people, one of which was an industrialist like Elon Musk, love him or hate him, Henry Ford, and a gentleman named Buckminster Fuller, who both said that the only way to keep money under control is that it has to be based on energy. Now, they probably didn't understand exactly how that would work. They just knew that money needed to be tied to energy, which I find interesting because energy itself is a commodity. It's sort of like making salt money. Do you use the salt to actually buy things, or do you use the salt to preserve meat? Because either way, you're going to have less salt in the end. It's commodity money is there's benefits, there's pros and cons, right? And many economists have talked about this. But I get the feeling that Henry Ford and Buckminster Fuller, that they weren't actually saying we need to make like coins out of, I don't know, some kind of solidified oil. I think they were actually thinking, how would we tie money directly to energy and not have it be a representation that could be, changed through legislation or the Federal Reserve or something like that, that it had to actually be money that could not be divorced physically by any law, any regulation, or any human being to energy. Elon Musk looks like he's kind of fallen in line with this, but you know how wishy-washy this guy can get about Bitcoin. So take the following with a grain of salt. Tesla and SpaceX CEO Elon Musk has reignited some discussion around Bitcoin, describing it as a fundamental physics-based currency grounded in energy. Speaking on a recent podcast with Nikhil Kamath, Musk emphasized that Bitcoin's value is tied to real-world energy expenditure, highlighting a distinction between digital assets and traditional fiat currencies. Quote, energy is the true currency, Musk said. This is why I said Bitcoin is based on energy. You can't legislate energy. You can't just, pass a law and suddenly have a lot of energy, end quote. The Tesla founder drew attention to the difficulty of producing and harnessing energy, linking it to Bitcoin's proof-of-work system, which requires substantial computational power and electricity to secure the network. He also referenced the Kardashev scale, which is a method for measuring a civilization's energy consumption, as a lens for understanding societal progress, and he suggested that evaluating a civilization by its capacity to generate and manage energy mirrors Bitcoin's design principles, where scarcity and computational effort underpin value. Looking further ahead, Musk proposed that advancements in artificial intelligence and robotics could render money obsolete. Oh, here we go with this one. Quote, I love this. In a future where anyone can have anything, I think you no longer need money as a database for labor allocation, he said, citing Ian M. Banks' Post-Scarcity Culture series as a blueprint for societies where superintelligent machines manage resources without monetary systems. Oh my God. Musk also underscored the unique qualities of Bitcoin, getting back to the Bitcoin discussion. Unlike fiat money, which governments can print at will, Bitcoin's proof-of-work system ties its creation to energy and compute power, giving it a built-in scarcity and relative independence from political influence. Quote, governments can print money, but they cannot print energy, Musk said. And I 100% agree with that. While Musk envisions a future where energy might serve as a more fundamental measure of value, he acknowledged that traditional money remains dominant today. National currencies contribute to govern commerce, wages, and savings, while cryptocurrencies like Bitcoin exist as alternative assets rather than replacements for everyday transactions. See, he's going off the rails again. Musk's remarks provides a reminder of the philosophical underpinnings of Bitcoin, linking it to physics and energy rather than policy and governmental control. And then they talk about the price drop. So I'm not even, who gives a shit? We're done with that. Here's the thing, boys and girls, ladies and gentlemen, carbon. This all boils down to carbon. Outside of direct exposure to sunlight on, say, a solar panel, or rather slightly indirectly wind, which is weather patterns, which is driven by the sun, but not by photons striking a surface, right? It's just, it warms up one side of the atmosphere. The warm air, the cold air wants to rush in because all of a sudden there's like less pressure, there's less air density where the air is warmer, so it creates sort of like a negative pressure, whatever, right? Yeah, I'm just saying that these energy flows that we say solar dry, or we got solar power, we got wind power, and we've also got hydroelectricity. But that's also driven indirectly by the sun. It evaporates water, it gets in the clouds, it rains somewhere else, preferably somewhere up higher. The water flows downhill, converting potential energy into kinetic energy. This is all simple shit. But those are really not currency. It's a representation of energy, and specifically of energy flow. But we have a completely different source of energy that was directly manufactured by the sun, and that's fossil fuels. Now, you might be a listener and say, I hate it when you talk about oil because I'm a greenie and oil bad. Okay, I get you. I don't think so, but I understand the sentiment, and I'm not going to try to convert you. What I'm saying is, why? Methane, light sweet crude, heavy crude, tar, whatever, tar sands in Canada, coal, it's carbon. Why is it energy? Does the carbon molecule have energy? Well, not unless you split it. and then work with Einstein's theory of relativity, or not theory of relativity, E equals his energy equation, E equals mc squared. No, if it's the atom itself, unless you split it, is going to have its own contained energy. It's not going to release any of that. It's the bonds between the carbon atoms. Well, how do those form? Well, that forms because of photosynthesis, ladies and gentlemen, boys and girls. If you think back to the 6th grade, when your teacher bored you to death with photosynthesis, I want you to understand 2 things. One, it was the most important discussion you could have had in grade school about everything that you think you know. Second, it's terrible that you got such a shitty fucking teacher that they did not know how to light your ass up about the fact that sunlight striking plants builds sugar molecules out of carbon. And that is used all the way throughout the plant and out into its roots and out into its soil as a form of direct currency. These plants pay fungus to go mine phosphorus for them. What do they pay them in? They pay them in sugar and protein exudates off of their roots. They're giving them money. It's carbon-based money, and it can only be manufactured by that plant let's just say by plants. This is the only way we got coal, and it's the only way we got oil. Not because plants turned into oil, but animals fed on algae in the oceans, and then when they died, their little bodies that were now full with fat because of their own metabolism settled to the bottom, got layered over with sand, and millions of years later, boom, my dad decides to drill a hole in the ground and pulls out fucking oil. A very high, dense concentration of energy. But in a not so high concentrated and less dense form of energy, we have what's going on in the soil. The entire ecosystem. When you walk outside, you are walking out into a carbon economy. If you don't understand that, I fault your 6th grade teacher for boring you to death in school. In fact, they bored me to death. I didn't look at what photosynthesis actually did until, over the last few years. And now I cannot get enough of how this shit works. It is an amazing technology. And if you were bored to death like me in the 6th grade, go find yourself a book, a good book. Type into Google, where is an exciting book or a good book about photosynthesis? And read it. And then understand that the products of photosynthesis can not only be used in a way like salt. You can either use it to buy things or you can use it to preserve meat. In the plant's case, you can use it to buy phosphorus from fungi, and a whole bunch of other critters do a whole bunch of other stuff. It's not just the fungi and phosphorus. It's like everything. By bacteria and nematode, you name it, man. If it's under the soil, there is a whole market under there. But the plant can also use it for structures. What do you think trees are made out of? Lignin, cellulose, and hemicellulose. That is the dead part structure of the tree that gives it its structure. And that is what gave us coal. Why? Because it's built out of carbon. Elon Musk is not wrong. Henry Ford was not wrong. Buckminster Fuller was not wrong. Bitcoin is the best representation we have of how humans can use something like the currency generated from photosynthesis, but all of these people understood the truth. You cannot legislate energy into existence, nor can you destroy it. That's a critical issue here. The more you understand about photosynthesis, the more you understand how energy is put and saved and conserved into carbon bonds, the more you will understand what money was supposed to be like. Earth and the universe gave us the model. We're just now scratching the surface of what that looks like with Bitcoin. Again, I'm telling you, if you were bored to tears in 6th grade during the photosynthesis talk, your teacher did you a massive disservice. Mine did. but we can fix it. I did. You can. Learn about photosynthesis. Understand what's coming for the economy. Let's move on to frontier AI models demonstrate human-level capability in exploiting smart contracts. Woohoo! From decrypt.co. Let's see how DeFi is going to die over the next 10 years, shall we? Jason Nelson is writing this one, by the way. AI agents matched the performance of skilled human attackers in more than half of the smart contract exploits recorded on major blockchains over the last 5 years, according to new data released Monday by Anthropic. Anthropic evaluated 10 frontier models, including Llama 3, Sonnet 3.7, Opus 4, GPT-5, and DeepSeek version 3, on a dataset of 405 historical smart contract exploits. The agents produced working attacks against 207 of them, totaling $550 million in simulated stolen funds. The findings showed how quickly automated systems can weaponize vulnerabilities and identify brand new ones that developers have not addressed, in many cases, probably didn't even see. The new disclosure is the latest from the developer of Claude AI. Last month, Anthropic detailed how Chinese hackers used Claude code to launch what it called the first AI-driven cyber attack. Security experts said the results confirmed how accessible many of these flaws already are. Quote, AI is already being used in ASPM tools like WizCode and Apiro and in standard SAST and DAST scanners, David Schwed, COO of Sovereign AI, told Decrypt, quote, that means bad actors will use the same technology to identify vulnerabilities. You think? Schwed said that the model-driven attacks described in the report would be straightforward to scale because many vulnerabilities are already publicly disclosed through common vulnerabilities and exposures or audit reports, making them learnable by AI systems and easy to attempt against existing smart contracts. Quote, even easier would be to find a disclosed vulnerability, find projects that fork that project, and just attempt that vulnerability, which may not have been patched. This can all be done now 24/7 against all projects, even those now with smaller TVLs are targets because, why not? It's agentic. It's like cheap and it runs 24/7. Dude, this is why I'm going to go to sleep tonight. Do you have any idea how much cash I've got tied up in like Sushi Swap and other DeFi crap that's run by contracts? None. I have $0 tied up into any shit coin, any DeFi project. I have nothing to do with it. And thankfully, I've been proven correct yet once again, because you don't want to have anything to do with this crap, man. Continuing. To measure current capabilities, Anthropic plotted each model's total exploit revenue against its release date using only 34 contracts exploited after March of 2025. Quote, although total exploit revenue is an imperfect metric since a few outlier exploits dominate the total revenue, we highlight it over attack success rate because attackers care about how much money AI agents can extract, not the number or difficulty of bugs that they find, the company wrote. Anthropic didn't immediately respond to requests for comment, but they did say it tested the agents on a 0-day data set of 2,849 contracts drawn from more than 9.4 million on Binance Smart Chain. I don't know exactly what that sentence means, so if you're confused, please tell me, or not confused, please tell me what it means. I think it was a bad sentence. Continuing. The company said Claude, Sonnet 4.5, and GPT-5 each uncovered 2 undisclosed flaws that produced $3,694 in simulated value, while GPT-5 achieving its result at an API cost of $3,476. Anthropic noted that all tests ran in sandboxed environments that replicated blockchains, but not real networks. Not yet, anyway. Its strongest model, Claude Opus 4.5, exploited 17 of the March 2025 vulnerabilities and accounted for 4.5 million in the total simulated value. The company linked improvements across models to advances in tool use, error recovery, and long horizon task execution across 4 generations of Claude models. Token costs fell by 70%. One of the newly discovered flaws involved a token contract with a public calculator function that lacked a view modifier, which allowed the agent to repeatedly alter internal state variables and sell inflated balances on decentralized exchanges. The simulated exploit generated about $2,500. Shwed said the issues highlighted in the experiment were really just business logic flaws, adding that AI systems can identify these weaknesses when given structure and context. Quote, AI can also discover them given an understanding of how a smart contract should function and with detailed prompts on how to attempt to circumvent logic checks in the process. Anthropic said the capabilities that enabled agents to exploit smart contracts also apply to other types of software, and that falling costs will shrink the window between deployment and exploitation. The company urged developers to adopt automated tools in their security workflows so defensive use advances as quickly as offensive use advances. Despite Anthropic's warning, Shwed said the outlook is not solely negative. Of course not. Quote, I always push back on the doom and gloom and say with proper controls, rigorous internal testing, along with real-time monitoring and circuit breakers, most of these are avoidable. The good actors have the same access to the same agents, so if the bad actors can find it, so can the good actors. We have to think and act differently, end quote. That's the end of the article. I'm not done yet. We have to think and act differently. I'm sorry, you're talking about humans. You're talking, if we were to scope this context down to just people creating shit projects and DeFi projects and smart contract crap for sushi swap and all the garbage that's out there, they're not going to take their time. That's not what they're here for. They're here to steal your money as fast as humanly possible. And now the race is on, buddy boy. The next project, the shit coin, the shit DeFi, the shit blockchain, the next one that drops has a timer on it, and it's counting down, and it's counting down fast. They're going to try to rip you off for as much money as you possibly can so that they can take the shit themselves before an AI agent takes it from them. And that window of time is going to start out to be very small, and it's going to do nothing but shrink. If you want to not lose your money in the future, for the love of God, stop shitcoining. On to China, where they reiterate its ban on Bitcoin and digital assets, tighter controls on stable coins as well. This is from atlas21.com. According to China Daily, the People's Bank of China reaffirmed its stance against digital assets, issuing a warning about the reappearance of trading activity. Oh my God! And announcing stricter measures targeting stablecoins. On November the 28th, the country's central banking institution stated that speculative activities involving digital assets have resurfaced. For the central bank, this trend poses new challenges to risk management within the national financial system. In its official statement, the bank firmly reiterated that digital assets do not share the same legal status as traditional currency, is not legal tender, and cannot be used as a means of payment in the market. Any commercial activity related to cryptocurrencies is classified as illegal financial activity. China's cryptocurrency ban has been in place since 2021, when the central bank prohibited both trading and mining. The reasons given at the time included the need to combat criminal activity and concerns about the stability of the national financial system. Okay, so that's all we really need from that. They're banning Bitcoin again. This is their 5th ban on Bitcoin, I believe. And you notice, if you've listened to this show before, I've read several articles about Chinese mining still going strong. still providing the Bitcoin network with a substantial, more than substantial percentage of the network hash rate. And yet, China's fine with that. But now that trading is reemerging, oh my God, the humanity. Yeah, now they're pissed. So here we go again with yet another ban. Screw them. Hope they all die. No, not the Chinese people, just the regulations and the departments that actually handle all that crap. You never know. Maybe we'll get our wish and all these institutions will just fade away. Yeah, I know. I agree. I heard somebody say that out there. Not bloody likely. Well, Zappo Bank expands Bitcoin credit fund as demand grows. Bitcoin News, this is written by Nima. Zappo Bank is expanding access to Bitcoin credit fund after the product attracted more than $100 million from members in its very first phase. The fund lets people earn interest, oh God, on their Bitcoin through safe, regulated lending. I'm going to pause. There's no such thing as safe, regulated lending. It doesn't exist. Even the guys over at the guys at Unchained Capital, or which is now just Unchained, in Austin, Texas, they will tell you the same thing. And they have a lending product. They will lend you money against your Bitcoin, and they make sure that they got a lot of your Bitcoin, and you only get like half or less than half of that Bitcoin's value. They're doing their best to protect you, but they will be the first to tell you there's no such thing as safe when it comes to making a loan on your, or getting a loan on your Bitcoin. All right, so don't believe that shit. That's just marketing. The move is part of Zappo's long-term plan to build a secure and trusted system for Bitcoin-based financial services. The BTC Credit Fund, first launched in 2024 with Hilbert Group, gives Bitcoin holders a way to earn yield without selling their Bitcoin. Instead of risky lending or volatile DeFi platforms, Zappo uses banking-style approach that focuses on safety and institutional lending. Zappo says that the expansion of the fund has been slow but carefully planned. When the bank partnered with the Hilbert Group in 2024 to establish the fund, it said it anticipated receiving global investment capital exceeding $200 million. After earning full regulatory approval in Gibraltar, Zappo is now opening the fund to more people. The fund is also regulated in the Cayman Islands. Do the math. Adding yet another layer of oversight. Oh yes, because, you're registered in the Cayman Islands. Yeah, sure. Yeah, there's not like every freaking corporation laundering money through the Caymans. Having shadow corporate structures registered in the Caymans. Come on, Zappo, get your shit together. It is not another layer of regulation. It is a layer of obfuscation. If you want to say that, I'll give it to you. But whatever, Zappo says, this helps keep the fund safe. Oh my God. And it prevents the kind of risky behavior that caused major digital asset lenders to fail in 2022. 2022 was particularly hard year for digital asset lenders and users like, Three Arrows Capital, Genesis, BlockFi, and FTX. They all went to shit and tits up in that year, creating one of the harshest environments for digital assets ever recorded. Tommy Doyle, global head of relationship management at Zappo, said that the fund is designed for long-term Bitcoin holders, adding, quote, the Zappo BTC Credit Fund fits nicely into our suite of BTC wealth products in delivering consistent yield with a limited low-risk appetite for our long-term BTC holders, end quote. And this shows that Zappo, my God, they focus on safety, not speculation. There's no such thing as a safe lending product. Ask me how I know, and not with Bitcoin, by the way. I did this in the traditional markets about 20 years ago, and it was not pretty then. And it sure as shit ain't pretty with Bitcoin, which is why I don't do it. So Zappo's got this thing. What this story is demonstrating is that the almost incessant appetite for credit products, Bitcoin or not, is expanding. What does this tell me? It tells me, like in fact, was it Rothmus? I can't remember who did it on Nostr. Showed a Fred chart that showed a $13.8 billion injection on reverse repo by the Federal Reserve, like over the last couple of days, which is like one of the largest injections of liquidity into the markets since COVID. And I keep looking around and I keep seeing people, why don't they have any money? At least let's just keep it to the United States. Well, nobody has any money. All the money ends up going to, and I'm going to say it this way because let's say it this other way. All the money that's released to the public ends up in the hands of who? The institutions. And mostly not the government institutions. They print the money and they essentially find a way for it to get to you, kinda. And then you give that money right back to government's best friend, Jeff Bezos, because you bought Amazon and you didn't go to a local shop in your local town that you live in and, buy something from there. Buy your clothes from a local clothes store. But it's cheaper on Amazon. Not for long. This shit continues. Amazon's going to be able to charge whatever the fuck they want to charge because all the rest of the people that sell clothes are out of business because everybody bought them at Amazon. But that's not about this. This isn't about that. This is about the money seems to continuously and more quickly than ever pool in places that don't necessarily need it. And I'm talking about the massive corporations like Coca-Cola, Microsoft, Amazon, Google, whatever, right? It pools over there. It pools into banks. It pools and it sits there. It's like money gets created. It has a brief time on the market and then all of a sudden it gets sucked up like it's being drunk by a straw into these major institutions, which leads people with no money. So what has to happen? Well, the Fed injects money. Now, they didn't do it with the repo market, but again, there are ways for that money to bleed out into the economy. And as long as you keep people just slightly happy, they don't revolt. Called bread and circuses. We have NFL and McDonald's for that, even though McDonald's itself is pricey. But I'm saying that what I'm seeing is as money gets printed, it takes less and less time for that money to leave the market permanently and get pooled by somebody who has absolutely no fucking intention of selling it, spending it, using it, leveraging it, anything with it. Just sits there. I'm not advocating for wealth redistribution. What I'm advocating for is decent money. Because I guarantee you, like let's say, like if there is a river that has an unending flow of water that's added to it without any kind of rainfall whatsoever, a spring out of the ground, over the centuries, that spring is probably, if there's never any rain, that spring is going to dry up. As that water ran down the hill into lakes and streams and lakes and ponds and whatnot, these little pools, right? These little pools of liquidity. If that water keeps rushing, these pools keep getting bigger and bigger and bigger and bigger and bigger. But after a while, that water stops rushing. All of a sudden, the pools themselves will start to evaporate and they'll get back into the atmosphere. And then maybe the rain cycle will actually come again, restoring the natural flow of the universe so that then the spring gets recharged, the water starts to flow, the pools fill up, but instead of just continuously taking the water, the pools are allowed, or rather allow themselves to be depleted through natural evaporation so that money, i.e. rainfall, can go up into the atmosphere and get condensed and turn back into the same money, but just put somewhere else so that we have cash flow. We don't have that. We don't have anything close to that except for Bitcoin. But as far as fiat and regulated shit, we don't have that anymore. We kind of used to. But it's been so long since anybody's actually seen it function that most of those people are actually dead. Seriously. The last time that money probably actually functioned the way it was supposed to function was somewhere before the year 1913, at least in the United States. And even then, there's probably some caveats to that I'm unaware of. But at least from what I know, before 1913 and the creation of the Federal Reserve with the Federal Reserve Act, money actually had a decent, natural, more feminine function. And we've just fucking trashed it, which is why I want to go back and end this entire episode with what Elon Musk said about Bitcoin. He's invoking energy into money. This absolutely must be done. The model that I think people should look at is carbon money. And I'm not talking about money based on carbon credits. I'm talking about looking at the chemistry of how things occur, the chemistry and the biology and the biochemistry. All right, so you got chemistry, you got biochemistry, you got biology. They all kind of like hang out together at the bar drinking tequila. If you look at the way plants interact with their environment, when they cannot get phosphorus by themselves, unless that phosphorus just happens to be there and is not locked up as a mineral component, then yeah, sure, it can get it. But that doesn't exist because phosphorus doesn't like being all by itself. Phosphorus is an extrovert, and it really likes to be combined with something else. And as long as it's combined with something else, it's like pulling your girlfriend away from a group of other girls. It's fucking impossible when they're chattering, right? I'm just like, God, would you stop talking? We gotta go. We gotta go. It's exactly like that. No, you need a wingman. You need fungus. You need your best friend to step in and create a distraction and get your girlfriend pulled away. You need to pull the phosphorus away from the rock to get it to be bioavailable. Then and only then can it be transferred to the plant. But the plant's got to pay for that service. You got to buy your buddy a beer, dude. Plants do that with sugar, protein, and fat. All of them are carbon-based sources of energy. Plants, fungus, bacteria, nematodes, protozoa, they had their economy figured out, let's just say it, 250 million years ago. Whatever the first plant was, I used to know that number. I could go dig it up, but I'm not going to do that. Whatever. First time that photosynthesis started happening was the progenitor of an economy that we should be looking at. We should be modeling after it. In fact, if we could, we should probably be trying to figure out ways to pull that system into how we operate our businesses. How do we form relationships with other people? We have models of how to act that have been alive and well for millions of years, and we just refuse to see it. I think we're doing ourselves a grand disservice by not looking at how carbon functions in a biological, ecological community. But that's what Musk is getting at. That's what Henry Ford was talking about, and that's what Buckminster Fuller was talking about. But between all those three people, I'll bet you my ass the only person that actually got it to the depth that we're talking about right now was Buckminster Fuller. That dude was different. Henry Ford and Elon Musk are flat-ass industrialists. That's what they're concerned with. Buckminster Fuller really wasn't. He was more about trying to untangle the mysteries of the natural world. And when he and Henry Ford come to the same conclusion, and one's an industrialist, and one basically lives in his head and is not concerned about money and making millions of dollars, and they both say money needs to be based on energy, then we should probably listen. And guess what? We've already got the model. It exists in the layer of soil beneath your feet in every park you trot upon, in every forest you visit. Sadly, under every concrete pad or asphalted road, that function used to be there. Because that's the way the skin of the earth works. And if it's good enough for the skin of the earth, it's good enough for us. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.